Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with the euro-dollar pair with Paulo Greco. The average volatility of the EURUSD pair of the last 5 trading days as of July 3 is 75 pips, which is considered as moderate. We expect the pair to move between 1.1720 and 1.1870 on Thursday. The long-term regression channel is pointing upward, indicating a continued trend. The CCI technical indicator entered the overbought zone, but this only triggered a minor downward correction. Currently, the indicator is forming a bearish divergence. But in an uptrend, this typically suggests only possibility of a correction. The EURUSD pair remains on an upward trend. US domestic and foreign policy under Trump remains the dominant bearish factor for the dollar. Additionally, the market is interpreting many data releases as dollar negative or ignoring them altogether. We still note a complete unwillingness on the part of the market to buy the dollar under any circumstances. If the price falls below the moving average line, it's a sign line on a graphic. Small, short positions may be considered with a target of 1.1592 as a yellow thin line on a graphic. However, under current conditions, a sharp drop in the pair is unlikely. Above the moving average line, long positions remain relevant, with targets at 1.3841 and 1.1870, and continuation of the trend. Here is Laurie Bailey with pound sterling dollar pair forecast. Let's have a look. By the end of yesterday, the British pound had lost 108 bips. Although the reason was not the anticipation of today's US employment data, but rather domestic political turmoil, this could only worsen the pound's position going forward. Prime Minister Keir Starmer is expected to begin a cabinet reshuffle, with Chancellor Rachel Reeves reportedly first in line for dismissal due to the failure of social spending reform. The pound's price has fallen below the daily MACD line, it's a blue line on a graphic, and the day opened below the target level of 1.3635. This indicates that today's candlestick is likely to be black, bearish, opening the path toward the target range of 1.32083140. However, since the bull's momentum hasn't completely faded yet, weak US employment data for June could push the pound about the target level of 1.3834. On the 4-hour chart, the price is struggling with support at target level at 1.3635 and the MACD line. The Marling oscillator is developing in a downtrend zone. The US employment data release will determine the outcome of this battle. That's all for today. See you online soon.